Hi, Steve Sosnick here with today's Interactive Brokers Morning Market Morsel. What a difference a day makes. We were sort of doing some work yesterday talking about where did the volatility go and how quiet it's been, and well, it's coming back a little bit. Some of the themes we started to talk about when life was different a day ago, still remain in effect. One was, although volatility is low and the VIX is low for a good reason, it's probably not a very good idea to short because your risk reward just doesn't work in your favor. And that proved to be the case today because, again, the theory is if you're shorting the VIX around 12, where are you hoping it goes? 11, 11, 10, 9.5, and it could go against you in a big hurry. Today we're looking about 13.5. So in one day you would lose what it would have taken you, let's say, a week or two to make. That's not a very good risk reward, and that's why shorting VIX at low levels can be a very dangerous trade. Secondly, today the focus really is on China. One of the things we've been talking about had been how the new USMCA pact more or less takes the focus off North America as a trade conflict. Europe and Japan have been sort of receding into the background of trade conflicts, but the rhetoric has been heating up against China. There was a naval incident in the China Sea yesterday. Nothing too major, but it appears to be the precipitating cause. And so today we're hearing stories that China had been infecting servers that are distributed throughout the U.S. with malicious chips. And apparently Mike Pence is supposedly making a speech today that's going to be very hard on China. So that all adds to the backdrop of why we're trending lower today. Interestingly, the one sector that's outperforming, the one sector that's up really, is financials. That really makes sense when you think about it, because what we saw over the last couple of days is a drastic steepening of the yield curve. Banks make money off of the steepness of the yield curve to a large extent. They borrow short, they lend long. Think about your relationship with a bank. You'll probably have a savings or a checking account with a bank, which is a short-term loan to the bank, and you are probably borrowing for a mortgage, which is a long-term loan. Magnify that by millions of customers, and that's the banking system in a nutshell. So the steepness of the yield curve helps them. A lot to watch today. Hopefully that helped. Take care. Bye-bye.